The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. We start off this day up 5 points on the S&P cash, up with 2.27 billion shares on the New York Consolidated Tape. And guess what? We were down to 2070 and popped 22 points from the lows out here. And I think it was just too much, a little bit too much. But I think a lot of people are very confused about what's going on in the market. They discount options rollover every month, and every month you get some kind of push up and a dip, and then a push back up, and then the market pretty much by Wednesday actually goes back to where it was truly going to go. This is probably the time where there are more head fakes than a college football game. But it just, if you want to trade very tightly, I guess it works. But for the most part, trying to impart a huge amount of reason and project out what happens in these 2 days is generally, in my opinion, well overweighed. I tend to underweigh options expiration day. And normally, if I felt, it was a pretty good signal, then I'll probably weigh it as a signal that's pretty good, minus 75%. Same thing for the last 2 days. There's just not a lot of signal. There is a great deal of noise. The volume is nowhere close to the 2.5 billion or 2.6 billion shares that we've seen coming into the show last week. So a lot of people are getting ready to go on vacation. In fact, if you're down here in Florida, it has already started. Yes, most people that haven't been down to Florida don't know what I'm talking about. But it is the two hands on top of the steering wheel and no sign really of a head. Every once in a while, behind that seat, you can see a whiff of blue hair. And, of course, the right turn signal's been on for the last 2 miles. Yes, the snowbirds and their retirees have descended on Florida. They're clogging up every street and artery and restaurant. And, of course, you're not asking the most important question. How does that affect David White? Right. How does it affect me? Come on. You guys got to get in with the team. Well, anyway, it's irritated me to no end. And, of course, you know how easily I'm irritated to begin with. But that's it. Some say I'm crazy. That's maybe because I'm nuts. Anyway, it's the standard stuff. People driving on the far left extreme or the far right extreme of the lane, and that may basically putting their wheel in the gutter, the right wheel's in the gutter, and driving down there. In fact, you could take maybe a motorcycle or two and drive it by in their lane down one side. I've witnessed more stuff in the last two and a half days, just running out, not even getting out very far, just going to the store or trying to go and eat lunch like I did yesterday. That was a fiasco at the Chili's. Normally I can breeze right in, breeze right out in 30 minutes. No such luck. And, what can you say? Well, it is time to get this party started. And as always, between 2 and 3, we meet.
The following takes place between 2 p.m. and 3 p.m.
every day. But you know what? The first thing we got to do is get our histoire out of the way.
That it's all just a little bit of history repeating.
On the origin of species by means of natural selection, a groundbreaking scientific work by Charles Darwin is published in England on this day in 1859. Darwin's theory argued that the organisms gradually evolved through a process he called natural selection. In natural selection, organisms with the genetic variations that suit their environment tend to propagate more descendants than organisms of the same species that lack that variation, thus influencing the overall genetic makeup of the species. Many people credit him with something called survival of the fittest. And that is part of what he talks about, but it is not exactly what he meant. In fact, that's probably the biggest misconception about natural selection. And he said it time over and over again, but someone quoted him in a newspaper and it stuck. What he truly meant and spent the rest of his life trying to explain was it was survival of the most adaptable. And of course, by having these slight natural variations in the offspring, when things changed, the ones that could adapt the best lived on. And of course, the ones that didn't died off. And of course, a pretty interesting idea. It's kind of the real beginnings of science. A few other things. Astronomy, it was a little easier. You pointed at a telescope and you didn't have to go up against the Catholic Church. Well, I guess you did in the 1600s. But by the 1800s, you could publish something like this and not get crucified, literally. But very interesting. Of course, his trip on the, I think this ship was called the Turtle, down to the islands. And anybody's never been down there, very, very nice vacation. Not much going on down there. Not a party, not party central, but the Galapagos Islands, very interesting. And don't let those big things bite you. They're extremely poisonous. I guess that's all I got to say about that. Let's move on. Today, Tiffany came out with their numbers, and of course, was down 5-6% pre-market. Of course, now it's up in this bizarre market where bad earnings are good earnings. Where's my little thing? Can't find it here. Give me just a second here. Why is it not on my list of things? There it is. Up 4% now at $79.72. Not only did they say everything was bad, they said it's going to be bad next year, and everybody bought it anyway. Now, it's unclear whether everybody thinks that they're just sandbagging, but I'm going to have to dig into this probably over the weekend. I will be on vacation starting tomorrow. But it is tough for me to see just how incredibly insane this market should and does look, probably to new traders. How can you come out, tell everybody everything's horrible, and go from being down 5% to up 5%? Well, guess what? There are a lot of people stuck in Tiffany's. And the standard pattern, if you can get away with it, is to, of course, run everybody that was short this thing and just kind of make them ignore it. In fact, one of the stocks that just ignored it literally had a horrible earnings and horrible forecast was Adobe. And it returned within a day or two. I think it was this gap down back here on the 7th. But this is not uncommon. These people are continuing to guide down. And hedge funds that just have nowhere else to go or anywhere to put their money continue buying it, even when the news is horrible, even when it's going to be horrible for a while. And to buy on the idea that these guys are literally lying to you has to be almost insane. But probably not as insane as the people who were short this stock and couldn't figure out that it had absolutely nothing to do with whether this stock was worth anything or what it was worth or what it was, the true worth of it is. But we're seeing that Tiffany all in one day. But Adobe, very interesting to see the kind of moves that we've had out of some of these stocks that literally are telling you and forecasting horrible earnings into the future, and no one is believing it. Does not that now sound something like euphoria? Just how nuts do you have to be? I tell you what, if someone tells me their stock and their profit's going up, I take it with a few crystals of salt. If someone tells me their stock is going down, I pretty much believe them. I haven't found a lot of people that have told me that earnings are going down and mysteriously they came back up. Apple, of course, is one that's always sandbagged their earnings by 10 or 20 cents, so they can beat by 20 cents. So there becomes this kind of ridiculous game of analysts keep upping the earnings. If Apple sandbags 50 cents, they up them $1. And it's just this ridiculous notion that CEOs can lie about the future and the analysts won't go after them and just say that it should be higher anyway. And then eventually, of course, they don't make them, and the stock just totally falls out of bed. But if you've ever wondered why this pattern develops, it's twofold. One, analysts many times, if they don't know that you're doing poorly, like Tiffany's today, will ignore all reality and insert their own. In this case, find a bunch of people that were short pre-market, was run them for a while. This stock will probably go sideways for a good 30 or 60 days. And then what we will see is that those folks that will distribute this stock in the 80s, if they get a chance, this thing will go sideways for a while. And everybody that was stuck in it, that knows what the earnings are going to be next quarter and the quarter after that and the quarter after that, they're going to stink. Tiffany's told you they're going to stink. Adobe told you they're going to stink. These stocks have turned against all odds and gone higher. And guess what is a kind of a sign of insanity? And that is the euphoria that comes very close at the end of the markets. I suspect that they will be able to hold these things up come hell or high water into the first part of the year. But when traders come back in the first part of the year, you know what they'll be thinking? Is there anything I can do to get rid of the rest of this Tiffany stock I have? My guess is that's the way it will be. But let's look at this one next quarter. I'm going to write some notes down about what I was thinking. But Tiffany's, Adobe, there's a bunch of companies out here that have given horrible results. And the analysts are saying, yeah, they'll just be bad for the next 6 months. That's fine. Just keep buying it. Just keep buying it. In fact, I'm going to raise my target on Tiffany's like some bozo did from, I think it was 105 to 120. I'll have to go back and look at it in a break. It was something ridiculous. I guess that's what you can get away with in a euphoric market. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And of course, if you missed it this morning, Blue Origin. This is the Jeff Bezos company was able to land or take a rocket off and land it kind of like the cartoons in the 50s and 60s, maybe even the 70s. But I think it was kind of a 60s thing where the rocket would just come down on its own power just like it went up. And I wanted to check and just see how some of these companies that are involved in this business were doing. I can't even say it. Orbital Sciences, OA. Kind of interesting to see this thing test its high up here yesterday with very light volume. Previous volume was 1.3 million compared to the 250,000 shares yesterday. So pretty light volume in this one. And I get it was the most obvious of these. But I thought, there's going to probably be a lot of money. In fact, valuations for both SpaceX and Blue Origin are fairly large. Of course, Mr. Musk can't wait more than 5 seconds before he fires out a tweet. And as soon as basically Blue Origin was able to land its rocket ship back on with the same rocket that it took off with, it's kind of interesting that, of course, he says, congratulations, and we're still far ahead of you. And why they are ahead of you in a few things, I guess it's kind of like saying, our rockets are much better, but we made it to the moon in front of you. And I guess he just couldn't take it. But anyway, we talked a great deal about this Blue Origin before and how Jeff Bezos went out and fished the Saturn V rocket engines out of the ocean because no one knew how to actually build them. all the paperwork was shredded and destroyed because they were afraid the Russians would get it. And there were people that actually designed them were pretty much dead. Because this is like 1965, 1967 thing. Most of them were gone or didn't know anything or couldn't remember anything now. And they couldn't really even remember how to design. There's in these big rockets, they pump so much fuel through it that it looks just like a shower head. That's how the fuel and the oxidizer comes out. And when they first built those giant engines, they used to shake themselves apart because there was so much turbulence inside the combustion chamber. And they just kind of tried different things until they got it right. Well, all the engines laying around that you ever see at Johnson Space Center or anywhere else all had the ones that didn't work. They were hoping the Russians would copy them. And of course, spend huge amounts of time and waste huge amounts of dollars trying to copy them. And somehow the whole thing, when the space program wandered away, there wasn't a working version of that left anywhere. And they literally fished it out of the ocean to figure out what they did in the 1960s to get it right. And that's pretty much how they got the rocket to do what it was supposed to do today. Of course, they're talking about the Blue Origin rocket only going about Mach 4 or something, and Mr. Musk is crowing about his doing Mach 9.6, but of course it can't land. So I don't know which one's worse. You got a slow rocket that can land or a fast rocket that can't. So anyway, of course, the Holy Grail is the reusable rocket. That was supposed to be the ideal of course, the space shuttle. It didn't quite work out. But I guess with faster computers and a lot of new know-how, I guess they think they can just land these things back the same way that they went up, which is sitting on some pads. Interesting enough, though. Trying to see if there's anything else out here. I was wondering, actually, with the shoot down of the Russian fighter jet this morning, if you'd really see much of a move. I can't really see much, although I will give you I informed you thusly.
I informed you thusly.
Back about a month ago. And I got some very nasty emails about you probably ought to be looking at defense stocks if you want to invest in anything. They weren't going to return huge amounts of money, but certainly things are getting hotter. They are not getting cooler, of course, in the Mideast. And of course, you got one more country that hates us even a little bit more now. We threw Turkey under the bus today. So we can only wonder what will happen in that neck of the woods very soon. We'll be back in a little bit.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new Yield Pledge money market account with funds from another financial institution, or deposit new funds into an existing Yield Pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their Yield Pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And Taser's almost back in its trading range. I guess it is. It had a low on August 24th, $18.05. Kind of had just a little bit of a bounce over the last couple of days, but yet another bounce today. It got an order for 20,000 body cams for all the London police. And man, you'd think that maybe this thing would bounce a little higher. Had somebody email me about this. And again, this is the problem when you sell lots of stuff to governments, and that is everybody always thinks that you just get filthy rich off of it. And the answer is that you make some decent money, but you never make money like Apple does. There's no 75% profit margin. Of course, everybody bid on this deal, and of course, you've got to lower your bid. So even though you get big business like this, these contract businesses, you know, unless you're building a fighter and you get everything guaranteed, always kind of tough to figure out if that's big money or small money. And normally the smaller the order for companies like this that deal with government contracts, normally the higher the margin. So when they see something like 20,000 units, they a lot of times think that Taser dropped their linen and quit grinning and dropped their price. And that's why you get a kind of a bounce, but you don't get the kind of bounce that you would think that would really be huge out there. And what else? TrueCar. Boy, this thing has been beaten up over the last month or two rather vigorously above the head and shoulders. If this thing was only a $90 stock, I'd be shorting it, but it's not. Came down on monstrous volume, talked about bookkeeping issues, all that kind of stuff back in July 24th. It's taken all this time to get back and fill at least part of that gap. In fact, this thing is not only got a gap, it's got a gap that goes back to May 23rd, 2014. It's been open. It gapped over down over that gap on August 24th. Now it's back right up to that gap that goes back to May 23rd. And a lot of times you see these things where there's no trading range. It really kind of confirms what you think, and that is that without individual traders with positions at that price point, you get light and variable and quick trading. And that is that there's not really anybody, everybody that was above that wants to sell as this thing gets closer to that. But at the same time, do you really have a lot of people who want to stick their neck out knowing that all those people want to come back? So you get right back to this sweet spot where it becomes very tough. But TrueCar, the numbers were a little bit better than expected. I still think that it would be interesting at the least to figure out what this thing is going to do long term and whether or not they've got huge bookkeeping issues that are going to be recurring. But like Tiffany's, nobody wants to listen to anybody that says something's going down right now. Probably now until the end of the year. But like I said, very much like 1999, no one wanted to admit that what was making them rich was nothing more than a bubble. But that's just me. We're up 3 points on the S&P cash, 2.5 billion shares with, an hour and 20 minutes to go. So figure 2.9 to 3.1 billion shares on the New York Consolidated tape before we close today. See some other things. I want to see how Valero did. This thing has been breaking above its previous high. We've talked about it the last couple of days, but another day out here with light and variable trading. I'm wondering if, as we come back, I guess we got numbers tomorrow at 10:30 for the EIA numbers. If we just get yet another build and everything with the Russian fighter being shut down today and the fisticuffs going back and forth just fades into oblivion like all the other terrorist acts. In fact, Andy has an article today about that. And a lot of people would just like to, it kind of reminds me of reading the history books in the late 30s, where everybody just tried to pretend that the storm winds were not growing and coming at them. But Valero, kind of interesting. You've got, of course, all that issue in the Mideast. You've got, of course, the OPEC meeting coming. And I don't know if I guess we'll have to listen to Andy's show later about crack spreads. But certainly Valero, one of the king of the crack spread stocks, is into its August 13th high that had 9 million shares. And, you had about 4.8 million shares back on the 6th. And we're back up here once again, 3.8 million shares now. So, man, if things really got going, maybe 5.5. I think that would probably 5.2. I'm going to guess somewhere in that range. But it doesn't look like we're going to close below it. But certainly it looks like we'll be lighter volume. And I'm wondering if this isn't just a fear trade coming back. And that is over this weekend, gold maybe a little. I mean, we're up 8 points on gold. But crude, maybe if there's one time you want to own crude, it's until we come back on Monday. And we'll have to see whether that fear trade comes out. Andy says in the den, gasoline crack spreads are up and support VLO. I thought it was interesting, though. This thing is up there with no volume, which means that this thing could turn around and bite you very quickly. We've been chronicling Casey's store, whose earnings come out December 8th, another one of these stocks up here with very, very light volume. Yesterday, we were talking about the 300,000 shares compared to the September 9th high with 750,000 shares. It's kind of back into the trading range today. But again, volume, not going to do a whole lot, 264,000 shares. And, of course, we go into tomorrow volume will pretty much die by 11:30 or noon, and it will just be light and variable. Now, the only thing that could change that is if the Fed decides to drop the chalupa. We've got multiple people speaking tomorrow, but my guess is that maybe some stocks that are very thin, maybe they'll try to go and run some stops on them. But it looks to me like it's going to be pretty hard to move the markets going into the weekend. My guess is that we come back next Monday and the Black Friday sales numbers are in and they disappoint and we start pulling back a little bit. But still think we probably slowly drift and stumble like a drunk, slowly higher into the end of the year. And maybe today's movement is light volume, but light volume is the choice as we get into these last 5 weeks of the year. Each day, the volume will probably tend to be lighter. And of course, besides the 16th and 17th, where we actually have the Fed meeting, I think that's the last 2 volume days of the year. My guess is that it'll be over quick like a Roman candle, and that will be it. Anyway, up 3 points on the S&P cash. Volume is tepid for going much higher, but we'll do that. Of course, we'll look at the dollar here real quick. My guess is that this thing, it's being actively pushed, at least on the dollar index, to keep it under 100. I don't think it's failed. My guess is that we're going to get at least a push back higher. And if we went to like 101 and then reversed and came back down, I could say that maybe this is a high. But to me, this is just building steam to bust above that. And again, we'll still have to wait and see if any kind of juice comes in behind the dollar. But it's hard for me not to think that we don't bust through 100 and just keep continuing on. Once bonds really turn, once cash markets and FX, Forex markets really turn, they seem to have a life of their own, and so does the dollar. Other than a few hiccups where it kind of gave us a head fake, this thing's done nothing but continue to move higher. I wonder where I got that sound effect from. Very interesting. What else do we have going on out here? Oh, I want to look at some other stocks. That's what it was. Also, of course, I wanted to see how the crude price jump out here affected Southwest. And of course, we also have a president telling us there's nothing to worry about and a State Department saying run for your lives. So who do you trust? Well, in Southwest lines, I trust the volume of the highs out here. 46.96, January 29th, 9.3 million shares. Yesterday, we had 6.1 million shares. And, there's probably a little bit more to this global warning for all U.S. travelers. But at the same time, maybe a little higher crude prices up. We're up, what, $1.15? I think we could drift higher. We could drift probably back up into the mid 45s. And maybe that we do something like that through that OPEC meeting, have a little higher trading range, and then see even additional stores come on to market and really crush this market. But kind of hard to tell right now. We'll have to see. But Southwest Airlines, what else do we have out here? We have Love. Was it DAS? Hang on just a second. DSA? Yeah, I'll worry about it another day. We talked about Valero. Westar Energy, another energy company that has tested its high. It's done it on lighter volume. Going back to the January 29th, 2015 high of $42.95, 1.8 million shares. This has come up with kind of the same energy, but it's really, if you look just at the past, 10, 15 trading days out here, you really see how the volume has fallen as it's gotten back up to this January 29th high. And of course, we tested it yesterday with 1 million shares and popped right back into the trading range. Not enough energy to get escape velocity, not enough to really blow it down significantly. But again, you just have some kind of nice reversals out here in some of these stocks. Let's go back and look and see what we've had previously. and some of these other stocks. We talked about Booz Hamilton, of course, yesterday. It's kind of up against its little spike from earnings on the 28th. It did that with 2.6 million shares, got 2.5 million shares. So very indeterminate out here. But it looks like my guess would be going back up to 30.78, which is just 28 cents higher before you get a good read on that. Of course, we continue to look at some of these stocks that seem to have no bottom. And, you had Cliffs Natural have a high volume low of July 22nd with 15 million shares, $2.28. Dipped into it on October 2nd, but didn't pierce it. We did pierce it yesterday, and it closed back in the trading range. Did so on 1/3 the volume. And literally, this is not a bad-looking chart out here now. Of course, it's a $2 stock, so you got to treat it like a penny stock. But you know what? Not all that bad. Now, the bounce is not a whole lot today. This stock is not going to turn in a day or two out here for all the stuff that they have to do with it. But we might have just some temporary lows being put in here. But if these things could go, I don't know, maybe till the first of the year and volume remains light, maybe we've gotten to the bottom of some of these stocks, at least for a while. But Cliffs Natural is very interesting to me. Trip, I wanted to see how this one did. We talked about this one looking pretty good, going right into its huge gap down of the 24th of June or July 24th. This gap down with 7.2 million shares. Got into it yesterday and the day before with about 2 million shares. Now it's popping back down. Not a bad little setup out here. I wish there was a little bit more. My guess is this thing could drift around and up into this gap, maybe a little bit more, but maybe 87, 87.50 with light volume going into the end of the year. This might be a very interesting trade back into the gap that takes you all the way from 67 to about 74, which is more about short covering than anything else. But we'll do that. Let's take some look at even older stocks from last week and see how they're doing. We talked about zinc and Horsehead Holdings as one of these stocks that also looked in the commodity sectors as it could be making some kind of low in this sector. That is the $5 and what is that? $2.23 low of October 2nd. Set everything up with 5.6 million shares. Never exceeded that. We've been kind of below that. Today, what are we at? 234. So, you're back into the trading range out here. You did come down here with a lighter volume from that October 9th high. And it does look like maybe something could be happening in commodities. And, maybe it can be other things out there, less a supply and demand issue and more an issue of maybe the Mideast turning into a lake of fire. Who knows? Something's going on out here. Light volume anyway. I don't know what the price of zinc is. Zinc is ugly, says Andy Heck. Zinc says you're ugly, Andy.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
A little follow-up. Last week, we were talking about GNC Holdings and their vitamins and the Fed's coming down on everybody. It was kind of very unclear what was going on in a variety of things. But I finally got a little bit of clarity. And I guess we talked about these guys in Palm Beach that were running these vitamin and supplement deals. But apparently now, at least allegedly, I'll put it that way, allegedly, these fine gentlemen were making some kind of muscle-building protein shake that they were selling to GNC, and they found out a bunch of people that were using this stuff, whatever it was in it, it had known chemicals in it that caused kidney and liver failure. So the feds wrote a quick note and FedExed it to the people making this thing. It's called Jacked Up, something like that. Anyway, and said, quit selling this instantly. Call all the people you sold it to and tell them to quit selling it. And instead of doing this, these gentlemen sold everything that they had instantly to GNC and Vitamin Source. And so why you don't see many criminal indictments for people in this, literally, if you believe the allegations, these bastards were killing people or near killing people, and because they were stuck with a ton of it, decided to sell a great deal of it to GNC. And of course, GNC didn't really know what to do when the feds told them to stop selling it. Apparently, there was this nebulous letter. And the question is whether or not GNC is going to be liable for any of these folks that, of course, now need a new kidney or liver transplant. But the downside to an unregulated business like that is, of course, especially if you're GNC, what do? You test every vat that comes in? It's kind of tough to see. But I think GNC looks like maybe at least the stock price is not getting alarmed with it. But my guess is there's some people facing some major time because the drugs that apparently, at least allegedly, the feds say that they put in this new upfront that it caused big problems with kidney and liver failure. So, and we'll go on to some other stuff out here. Wanted to take another look at Red Hat after its top. And it was up here. But I guess that's the gall of it, isn't it? Someone sends you something that says your product's going to kill people. And instead of trying to get rid of as much of it as you can in the trash can, you try to sell as much as you can before the end. My guess is they're going to fry those guys when they get to court if that's at all true. Even if it's half true, they're going to fry them. Red Hat had a nice test of the top June 19th, $81.49. Got into it, went above it, closed back into the trading range. It's kind of playing with the trading range yet again. Light volume out here, but this is you have these failures. You come back up here. But, even yesterday, another day where you had incredibly light volume, and just a lot of these stocks just look very toppy without a lot of room left over, and I guess it's going to be interesting to see. But a lot of times these stocks can drift higher into the end of the year, and that's where these things become the most vulnerable, like we walked in 2000 and saw the wheels fall off the wagon. We'll be back Monday. I'm gone. We're history. We're closed on Friday anyway, so we'll see you again on Monday. Same bat channel, same bat time. Hang on for Tom O'Brien and Andy Heck.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.